This is a bullish trend reversal as indicated by this indicator. Let's see what happens. The reversal actually happened. And this is a bearish trend reversal as indicated by the same indicator. Let's see what happens. The price went down. This is just one of the many trend reversals predicted by this indicator. And in this video, we're gonna go over what this indicator is and how you can use it in your trading. If you happen to find value, remember to leave a like. Let's get into it. Now, to get started with this indicator, you first of all want to go to TradingView, the trading platform that I'm going to be using. If you need to sign up, there's going to be a link in the video description for you to do that. Next, you want to load any trading security that you like in any time frame, and then you want to click on Indicators and type in Moving Average Shift, and it's going to be this one by Chart Prime. Ladies and gentlemen, this is the all-powerful Moving Average Shift indicator by Chart Prime. It's a comprehensive technical indicator designed to enhance trend following and mean reversion strategies. It combines various moving average types with a proprietary oscillator to visually indicate trend directions, price deviations from the moving average, and potential reversal points. The components of this indicator include the diamond labels used for mean reversion when the oscillator crosses above or below a certain threshold, the threshold which can actually be adjusted in the settings, right here. And then we have this oscillator down here. It's known as the MA shift oscillator. It measures the deviation or distance of price from the selected moving average. It's displayed below the main chart and provides the following insights. When the oscillator is above zero, prices are trading above the moving average, signaling bullish momentum. When it's below zero, prices are trading below the moving average, which basically indicates bearish momentum. However, for large deviations, when the oscillator is like too far away from zero, those indicate potential overextensions or mean reversion points in the market. And these are instances where you would want to consider looking for trend reversals. Now, looking at the scale of this indicator, you can see we have some values that you can use for your threshold filtering. In the settings, you can see we have the threshold set at 0.5. That basically means every time the oscillator crosses above the 0.5 level, which is above this shaded background as shown here, a yellow diamond is going to be printed to indicate an overextension to the upside. Conversely, as the oscillator histogram crosses under the minus 0.5 level, a blue diamond is going to be printed, indicating that the price is overextended to the downside. Threshold filtering helps avoid false signals and noise in the market. Signals become actionable when the oscillator moves beyond your chosen threshold and then crosses back to zero, setting up for high probability mean reversion setups. Now, looking at the oscillator, you can see it has light and dark colors. In a bullish trend, for example, a light blue color indicates an increase in bullish momentum, while a dark blue color indicates a decline in the pre-existing bullish momentum. And it's going to be the opposite for a bearish trend. A bright yellow color indicates an increase in bearish momentum, and a dark yellow color indicates a decline in the pre-existing bearish momentum. If we go back into the settings of the indicator, you can see we have the type of moving average to choose from. These options include SMA, EMA, SMMA, WMA, and VWMA. You can experiment with each type of moving average to see what suits your trading strategy. Here, I'm gonna change this to 55, and for the source, I'm gonna go with close. Down here, we have the length of the oscillator. I'm gonna stick with 15, but you can change yours depending on whether you want to capture longer-term momentum shifts or short-term momentum shifts in the market. Just remember, the lower this number is, the more noise you're gonna get. In the Style tab, we have several options that we can toggle on or off. For me, I'm not gonna change anything here, so click OK. Next, we're gonna go over how we can use this indicator to trade. But before we do that, let's talk about Simple FX, which is the forex broker that I use for trading. It's fast, effective, and safe to trade with. Not only do they have a web and mobile application, but they also have a desktop application that you can just download and trade with. They have no minimum deposit, and they made sure to use only the charts from TradingView across all their trading platforms. Simple FX, as mentioned before, has a mobile application that allows you to trade wherever you are. They have over 450 tradable instruments, including forex, forex, commodities, indices, and equities. But what I love the most about Simple FX is that they give you a first deposit bonus of up to $5,000 and a 10% cashback. To get access to the bonus as well as all the other perks, sign up to Simple FX using the link in the video description. Now, back to the video. We're gonna use this indicator in several ways. Number one, and the most obvious, is to determine the trend of the market. This is a bullish trend, as you can see. You just wanna make sure that the color of the moving average is blue and the price is consistently trading above the moving average. Conversely, if this is a bearish trend, the moving average should be colored yellow with the price consistently trading below the moving average. The second way of trading with this indicator is to identify reversals in the market based on mean reversion signals, which are indicated by these diamond labels. As mentioned before, when the price overextends too far to the upside, the oscillator histogram is going to cross your predefined threshold like it did here. And then, as soon as that happens and the momentum of the market starts to decline, a yellow diamond label is going to be printed, an indication that the price might reverse to the downside. So if you have other confluence factors, you would get ready to look for short positions. And of course, it's gonna be the opposite for when the market overextends too far to the downside. The oscillator histogram is gonna go under the minus 0.5 level, which is our threshold. And then as soon as the bearish momentum starts to decline, indicated by the change of color from bright yellow to dark yellow, a blue diamond label is gonna be printed. When that happens, you can start looking for potential reversal signals to the upside. But did you know a better way to utilize these mean reversion signals is to trade based on pullbacks? Let me show you. If you have your own strategy, you could add confluences that say for a long position, you want the price to be bullish like this, and then you wait for the price to pull back to the point where it touches the moving average only with a wick. During the pullback, you want the price to be slightly overextended to the downside, which is indicated by these mean reversion signals right here. This basically indicates that the oscillator histogram is under our threshold, and then at the moment the momentum of the market starts to shift back to bullish, you shouldn't enter the trade on a bearish candle like this one. Instead, you want to wait for a bullish engulfing candle like this one, and then you take your long position. Place your stop loss under the most recent swing low, set your take profit at 2 times the risk, letting the trade run. And as you can see, ladies and gentlemen, the trade was profitable. Now, you have to remember that during the pullback, the candles have to touch the moving average only with a wick, and they should not close under the moving average. Similarly, here was a short position. The market was bearish, as indicated by the yellow moving average. The price then pulled back up to the point where it was slightly overextended to the upside, indicating a pullback. Now, during the pullback, the price only touched the moving average with a wick. And then we had a mean reversion signal right here on an engulfing bearish candle. So we go directly and take the short position. Place your stop loss above the most recent swing high. The take profit is going to be set at 2 times the risk, letting the trade run. And the trade was profitable. In summary, the moving average shift, also known as the MA shift indicator, effectively merges trend following with mean reversion strategies, offering a complete analytical framework in one easy-to-read visual. By providing customization and clear visual signals, traders can accurately pinpoint trending direction, momentum shifts, and reversal opportunities. Keep in mind that the strategy showcased in this video is not complete and is not even profitable long-term, because it wasn't actually a full strategy. It was just an educational piece of material to showcase how this indicator works. Go ahead and add your own discretionary judgment, price action, smart money concepts, or even ICT concepts and craft a strategy around this indicator. If you happen to find value in this video, remember to leave a like or even consider subscribing to stay tuned. Thanks for watching. See you next time.